quick thoughts from Seth Freeman. He's Senior Managing Director at Glassfatner Advisory and Capital Group. Joins us right now on the show to talk about this partial trade truce, or whichever way you look at it. Seth, how do you look at this? Because U.S. statements were very positive. Chinese statements haven't been as positive.
You're absolutely right. While I was looking at headlines before this interview, President Trump says this is the biggest deal in history for U.S. farmers. But in many cases, it's actually restoring some of China's historical purchases. That said, it's very important to farmers. Glassfatner has recently been working with a number of very distressed dairies and farm organizations, and it's just critical because of how big the ag economy is here in the United States to get this back on track. But you're right, in China, they're much more subdued about the announcement.
Seth, how do you think the equity markets read into this? I mean, Friday, of course, the markets went up. Now, while Chinese statements haven't been as optimistic, just from the looks of it, this is by far the most positive set of statements that I've seen in a while between both the nations.
Well, let's remember this deal announced is based on a handshake, and it's not signed, and it's not expected to actually go into effect until, I believe, the end of the month. So there's plenty of reason for skepticism, and we don't really know what might happen in December when another round of tariff increases are planned.
Okay, so I take it from the way you are talking, Seth, that you are not as sanguine. You would believe that maybe there's a pop reaction that has happened already. But would the markets think like you as well? That yes, the initial knee-jerk reaction, but then let's take it as it comes?
Yeah, I think some of this was baked in already. There were some expectations. It's, in terms of the U.S. piece of this, we're just deferring a 5% increase that was supposed to go on October 15th. That's sort of the good news from the Chinese perspective. And what we've received in return are some assurances that China is going to buy some ag and also going to implement some reforms in intellectual property and financial services. So these things take time. And also, despite the pain that China might have felt over the last year, they are in a position to play a long game. And the Trump administration doesn't have that luxury.
Yeah, well, maybe you have a point there. Seth, just one last question then. Since all of this are imponderables, what is, though, showing an immediate reaction, and it showed a bit of a reaction in Friday, are global commodity-linked stocks. Now, would you believe that just because of the headline news, the slight uptick that we saw both in crop prices and global commodity prices might just stay on a bit longer, and therefore all of those companies around the world might actually see some positive reactions during the course of the day?
Yeah, I think the reaction we had at the end of last week is sustainable, and there's no reason to think that there's going to be a big slide backwards. Trump says actually this is so great for farmers that they're going to not be able to keep up with demand, and that there's going to be major investments in heavy ag equipment, tractors and so forth, as a result of this. So the problem here is to separate the political piece with the real economic impact.